How do you actually figure out your risk tolerance?
So there are actually three key questions that you need to ask yourself. One, how much money am I actually willing to lose without stressing?
Yeah, then the second question is, what is my investment horizon? Am I looking for quick money in 6 months, or am I in this for a long haul?
And the third question you need to think about is, can I
Hello, welcome to the Nigerian Investors podcast, the unofficial podcast that tracks and reports on the activities of the Nigerian boss. My name is Moody, and with my colleague Aye, we will be hosting this podcast. TNI podcast is dedicated to stimulating a renewed enthusiasm among the general population with regard to the activities of the Nigerian Stock Exchange. Ultimately, the goal of TNI is to see that many Nigerians from all walks of life, both at home and in the diasporas, become active participants on the floor of the Nigerian Stock Exchange. Before we go further, we would like to place on record TNI podcast is solely for educational purposes and not a replacement for professional financial advice. Let's begin. Welcome to the Nigerian Investor, the podcast where we simplify investing, break down financial strategies, and help you to make smarter money moves in Nigeria. I am Moody.
And I'm Aye. If you're looking to build wealth and navigate the Nigerian stock market like a pro, you're in the right place.
Now, today's episode is a big one. All our episodes are always big, Aye.
Yeah, they are actually.
So it's all about something that separates the winners from the quitters in investing. That is risk tolerance.
Risk tolerance. The thing that determines whether you're sleeping like a baby or tossing and turning at night when the market dips, right?
Yeah, when the market takes a dip. Let's be real. If you don't understand your own risk tolerance, it will shock you. You will be checking stock prices every minute, panicking and making bad decisions.
Which brings us to today's story, right? About a young investor named Femi who thought he was the next Warren Buffett until a market humbled him.
And before we dive in, a quick disclaimer. Any names, stories, or analogies used in this episode are purely fictional and for illustrative purposes only. They do not represent any real individuals or events.
But we hope you learn from them still.
Yes, that's the goal of today's episode. So let's talk about risk tolerance. The first thing we're going to look at is the beginner's mistake. Every new investor makes this mistake. If you are a beginner, you haven't really learned the ropes when it comes to investing. I made a mistake, and I will agree with you too that he has also made a mistake.
I think almost every investor will have made this mistake at some point.
Yeah, that's it. So picture this. Femi is a fresh graduate out of uni. He just got his first job, and like every young Nigerian, he's thinking, how do I make this money work for me?
And that's actually a very good thinking, right? But the problem is, he's about to find out that investing without understanding risk tolerance is like entering 10 mainland bridge traffic with an empty fuel tank.
That would be the worst nightmare ever for someone.
Yeah,
exactly. So
mainland bridges, it's
a
terrible idea.
And how frustrating the traffic could be sometimes, right?
Yeah.
So one day, his guy Tunde, self-proclaimed investment guru, gives him a hot stock tip. Bro, this fintech company is the future of Nigeria. It's about to blow. Buy now.
And you already know what happens next, right? Without doing any research, Femi throws half of his savings into this stock. And he's just completely confident that he's about to become very, very rich.
Yeah, that's a major mistake. Once you are given a stock recommendation, you still need to do your due diligence for you to be able to understand if it fits your risk appetite. That is why we are looking at this episode today. Let's get back to our story. And for a few weeks, it looks like he made the right call. The stock goes up 30%, and Femi is already dreaming of quitting his job, buying a Mercedes Benz, and move it to Banana Island. Sweet dreams.
Very sweet dreams indeed, right? But then, voila, a new government regulation cracks down on fintech companies, and his so-called future of Nigeria stock crashes by 50% in 1 week. Imagine that.
Yes, so my guy wakes up, check his portfolio, and his money has disappeared. He panics, sells everything at a huge loss, and swears that the stock market is a big scam.
But the funny thing is that the stock market is really not the problem, right?
No.
Or was the stock market really the problem? It wasn't the problem,
No.
right? Or was it that Femi had no idea what his risk tolerance was?
Yeah, I think that's the problem. He didn't really analyze his own risk tolerance. He just went in based on recommendation by words of mouth. Even though today is this guy, both of them have different risk tolerance based on their earnings capability and how they spend their money. That brings us to the second segment, understanding risk tolerance. What exactly is risk tolerance? It is basically your ability to handle market ups and downs without losing your mind. That's the key point, without losing your mind, because the market is always volatile.
Very, very true, right? And it's very different for different people, right? Some people can handle big swings in the market and sleep like a baby. Whereas others, the moment they see a 5% drop in their portfolio, they're already running and selling everything.
Yeah. So that's what Femi has come to realize now. Now, Femi had zero understanding of his risk tolerance. He thought he was a high-risk investor, but the moment his money dropped, he panicked and sold at a loss.
Which is why it's one of the biggest mistakes new investors make. Because it's very, very confusing, like liking money with liking risk, right? Just because you want big returns doesn't mean that you can handle the pressure. You need to think about that very, very carefully.
Yeah. So how do you actually figure out your risk tolerance? That brings us to the third segment, how to determine your risk tolerance.
Yeah, so there are actually three key questions that you need to ask yourself. One, how much money am I actually willing to lose without stressing? That's the first question you need to ask yourself.
Yeah, then the second question is, what is my investment horizon? Am I looking for quick money in 6 months, or am I in this for a long haul?
And the third question you need to think about is, can I sleep peacefully when my investment drops? Or will I be checking my stock price every 10 minutes to see what's happening on the market?
So you can see from the story so far, Femi did ask himself these questions. But after his loss, he did some soul searching and realized he needed a different approach.
So now let's quickly look at Femi's comeback story, right? Let's see how he re-strategized and came back to the market and figured out his risk tolerance and how to approach the market, right? So this time around, he plays it smart. He builds a portfolio that actually matches his risk tolerance. What does he do, Mondi?
Instead of YOLOing his money into one stock, he diversifies 50% into solid blue chip companies like Dangote Cement, Seplat Nigeria PLC, MTN Nigeria, 30% in index funds that track the all-share index of the Nigeria stock market, and 20% in higher risk tech stocks.
This way, if the market crashes, he's not losing everything at once, right? His safe investment balance out the risky ones.
And then the real test comes. A major market downturn happens. Stocks are falling, investors are panicking, and Twitter is filled with "say everything, the market is finished" tweets.
But this time around, right, instead of selling out of fear, Femi remembers his plan. He holds on and even buys more while prices are low. We've talked about this basically, haven't we, Moody? Like, we call it a NCA plan or DCA plan, depending on whichever currency you want to think about. But the underlying goal is basically averaging down your purchase price. So dollar cost averaging or naira cost averaging, as the case might be, right?
Yes.
So this is basically one of the strategies Femi uses during the market downturn. So let's listen on.
Okay. So fast forward 2 years and boom, the market recovers. His portfolio doubles in value.
Not because he was lucky at all, no, but because he understood the risk, stayed patient, and played the long game.
Yeah, that's true. So what are the takeaways from this story that we just narrated? There are some few takeaways for every investor.
Number one, Before you invest, you need to know and understand your risk tolerance. Don't assume you're a high risk investor until you experience what a market drop really feels like.
Yeah. And the second thing you need to do that will help you when the market actually drops is diversify your portfolio is. So don't put all your money in one stock because of hype. Spread it across different assets.
Another thing you need to also keep in mind is that market crashes are completely normal. In fact, they are one of the good times for investors, right, to actually buy into the market. The whole buy low, sell high thing only works when you are in the market when the market is low, when the market has a dip, right? So the best thing for investors is don't panic. Rather, investors see downturns as opportunities.
Yeah, there are opportunities actually. So whether you are a high risk, high reward type of investor or a slow and steady one, the key is knowing yourself and playing to your strengths.
All right, that's it for today. Well, if you found today's episode very helpful, we'll advise you to subscribe, leave a review, and share it with someone who needs to hear this very important episode on risk tolerance. And this is particularly very important for a lot of our newbie investors who we've seen this over the years, right? I mean, we keep seeing these investors popping, they ask questions immediately: what stock do I buy? What stock is going to give me return in the next 6 months? Nobody ever thinks about the downside until the downside shows up and everybody begins to react like Femi does, right? And they start panic
Yeah.
selling. So this is a very important episode, right? And I think investors need to calm and think about this very carefully. Even if you are going to be a high risk, high return investor, it's always a good thing to start small, to really test the waters. I mean, I think there's a proverb that says before you I've forgotten the proverb. Moody, if you know the proverb, you can tell people.
You test the depth of a river by using one leg, so you don't use both
Yeah,
legs so that you don't drown.
Exactly, that's it. So we advise a lot of investors. I mean, before you become an expert investor, you always have to start small. So start small and figure out the market, and then from there you can build up resilience and build up your portfolio along with it.
Yeah, and don't forget to follow us on Twitter, YouTube channel, and TikTok channel, and Instagram, as well as Facebook.
All right, so we'll catch you next time on the Nigerian Investor. Until then, stay smart, invest wisely, and always remember, know your risk tolerance, right? And just as a quick reminder, Femi, Tunde, and all the scenarios in this episode are completely frictional, right? They are just here to help explain a very important investing lesson. Thank you so much. So until next time, then.
Have a nice day. Thank you for listening to another episode of the favorite podcast that brings insight to the Nigerian stock market. We hope you enjoyed today's episode. To get more episodes like this, follow us on YouTube, Twitter, Facebook, Instagram, TikTok, Amazon Music, Apple Podcasts, Spotify Podcasts, as well as on our website. All this information is available in the show note below this episode. Until we bring you another episode your way next week. Bye for now. TNI Podcast is executive produced by Moody. This episode was edited by Rona at Rock Quarry Village Studio.